Good morning, shareholders and stakeholders. My name is Patrick Mutz. I'm the Managing Director of Image Resources. And this morning's podcast is to provide a bit of an update on our project construction at Atlas and our plans for 2025. We recently published a quarterly report in which we announced a few things or updated the market on a few things, including that construction progress at Atlas is going on a very rapid pace. I can say that as we sit today, we anticipate going into commissioning of the project in February and looking forward to starting up in March. First HMC production anticipated in March, and a stretch goal of actually completing our first small shipment of HMC late March or perhaps early April. And that's a very important step because it's been a long drought of no revenue for the company since November of 2023. And so it is time for Image to return to being a producer and cash flow positive. One of the important aspects that was also included in the quarterly report was the fact that now we have secured funding through what is called an HMC offtake prepayment facility. The total of that secured funding was US $20 million. That happened in the quarter four, and the funds were received in total in early January. And so we now are fully funded for Atlas. That means the working capital all the way through now to positive cash flow. So that's a very important aspect. The next steps directly in front of us, as I mentioned briefly, are to begin project commissioning, which is effectively started right now, be in full swing by the end of February, and in March we anticipate turning on the tap and making our first HMC. And as we look forward to the full 2025 calendar year of production, we anticipate doing the same thing we did at our Bunanaring project, and that is to have a rapid startup, to be able to report that the construction was built on time and on budget, and hopefully that, like at Bunanaring, we ramp up to nameplate capacity very rapidly. Those are our plans, and I look forward to announcing that kind of result. Beyond Atlas, which is really the mainstay project, we are working diligently on a bankable feasibility study on our Yandanuka project, which is our plan for the next project in line. We already have published a pre-feasibility study, which was positive, and we are moving it to bankable feasibility stage, which we anticipate then to secure funding, primarily from debt, and supported as well from cash flow coming from Atlas. The earliest that could come online would be perhaps 2026. Late in the year, and that is our goal, to try to continue to have operations now coming online sequentially. So thank you for attending today. I look forward to receiving questions to hopefully add an extra bit of detail for those that are interested, and we'll turn to questions now. Thank you. To start the question and answer session, I did receive a few questions in email form before the recording of this session, because we had announced it for about the last week or a week and a half or so. The first question I'd start with this morning is from Mark. Mark asked, how is the prepayment debt facility going to be repaid and by when? Mark, thanks for that question. The prepayment facility, just as a reminder, of course, is the US $20 million debt facility that we secured back in November, and then received the funds from that facility in a little bit in late December, and the balance in early January. And that was received as working capital to get us through to positive cash flow at Atlas. The answer to Mark's question has to do with that the first thing is that HMC shipments are typically on a monthly basis. They're bulk shipments. And the idea is that we will repay the prepayment facility by delivering HMC product to the financiers in China. And the way that works is that about 25% of each shipment will be delivered as the repayment of the principal and interest on that facility. And the balance of 75% then will be purchased at market pricing. And that is the funds that will be received by Image then on each shipment basis, typically by a letter of credit, secured by a letter of credit, that will be used to cover our operating costs as we go forward. So the last part of Mark's question, I believe, was by when. The schedule for repayment of the full facility is literally before the end of December 2025. That's a calendar year. So that takes care of that first question. I'm just looking to see if we have another that has come through. I do have one other that came to me by email from Candace. And Candace asked if we're hiring, and is the Atlas arrangement a FIFO situation? I think in the mining industry, most everyone knows what FIFO means, but for those that may not, it is a fly-in, fly-out situation. And the short answer, Candace, is that ours is not a FIFO situation. It is more of a drive-in and drive-out. In other words, we do have a mining camp, and people that come to work do stay for their shift and then go back home at the end of their scheduled run, whether it's 5 days or 7 days. So that's the answer, not a FIFO, and happy to have people to contact us for potential jobs. We are hiring at this time. Thank you. I'm looking here at another question. I've got one from Philip. Philip is asking, which port is our product to be shipped out of and where is it going? And the answer, Philip, is that we will be shipping bulk shipments of heavy mineral concentrate out of the Geraldton port, in this case with Atlas being up toward the north. With our previous Boone and Aring project, we were shipping from Bunbury, further down in the south, obviously. But in this case, it makes sense to do it because we're closer to the port at Geraldton. And our HMC is destined for China. This is under the offtake agreements that we have had now in place since we started at Boone and Aring, and those offtake agreements continue for the life of the Atlas project. I'm just seeing here if there are any other questions. And I'm not seeing any others right now. I'm going to go back to one that Candace asked, and that's about are we hiring? And Candace, we've actually been hiring and what I'll call filling the roles for the Atlas project since August, and we continue to do that. We're getting to the final phases now of hiring the operational crew, and I want to say that we are, of course, focusing on local employment in the area. And so for anybody that is listening that has an interest in potential roles here at Image that are from perhaps the Jurien Bay or Cervantes area, we're certainly interested in having you contact us to see if there's a role that fits. And I'm not seeing any other questions right now. Sorry, one has just come back to me. I've got another one from Mark, a different Mark shareholder. Mark's asking, how would Image describe how it compares to its competitors? Mark, it's a reasonable question, and for those that know the mineral sands business, of course, our competitors, our biggest competitors are the likes of Iluka Resources, which we, very successful, and we respect their work very, very much, and Tronox as well in the Western Australia. And more recently, we've had entrance into the mineral sands business by Sheffield Resources and Strandline Resources. I think it's difficult necessarily to draw a strict comparison because we are small and we are a young, fledgling company. We have been profitable before at Boone and Aring, and now we will be again here at the Atlas project. I think, though, there is one aspect of a comparable note that is worth mentioning for shareholders that are perhaps looking at Image as an opportunity for an investment. And that is that we have been making information available about our ambitions to develop a new technology for producing something called synthetic rutile, which is an upgraded or value-added product that is made from ilmenite, which is one of our products in our suite. Ilmenite happens to be the lowest value project in the suite, and by converting it to synthetic rutile, which, by the way, our bigger competitors, Tronox and Iluka, do very successfully and have done for many, many years, definitely adds value to the product and therefore increases the overall profitability of the company. However, in Image's case, we're looking at adopting a new technology that we have provided into a provisional patent already back in November of 2023. And the idea of it is that it's a much lower emissions technology compared to the current technology used by our competitors, which is more than 50 years old. So we think it has a definite advantage, and we are looking forward to pulling together the research and the testing for that technology. And with some luck in the future, we'll have something that actually competes a bit with our larger competitors. I see another one here from Callum. For investors new to the mineral sands sector, why is now a great time to be looking at Image Resources? Thank you, Callum. It's never an easy question to answer, but what I can tell you is that if you look at the share price graph, if you will, of Image Resources, when we were operating successfully at Boone & Aring, we typically were in the share price of 18 cents all the way up to 30 cents at one point, but generally in the 18 to 22 cent range. And today we find ourselves back at about 9 cents per share. So I think that says a lot, in that we believe that once we are back into production and cash flow and profitability at Atlas, we will return to some of those higher levels of confidence. I think the other very important thing to say is that while Atlas is now nearing startup, and hopefully by the end of March, we are in first production again and looking forward to our first shipment of product, we are also working on 2 bankable feasibility studies, technically for 2 other projects that are in our portfolio. The first is called Yandanuka. We already have published a pre-feasibility study that was positive, and so the publication of a BFS, perhaps by about the middle of calendar year 2025, should be very positive. And then the second one is called the Bitamina project, which has also been finalized with a pre-feasibility study, and it was positive. And we're looking at building the bankable feasibility study on that project. The idea, of course, is that in our ambitions is to grow from being a single mine operating at one time and a single product to multiple mines operating at the same time, and in fact, looking forward to in the future of separating the HMC into the individual products and broadening our overall market reach globally. So those are very important reasons, I believe. And if we're successful then with our investigations of the synthetic rutile technology and bring that new innovative processing technology to the fore, it will add some additional value for Image shareholders. I've got one more question that's come through. Thank you. Nathan, are Image Resources looking to employ local tech service team? And is there any options for subcontracting or only employment? A very good question, Nathan. And I'm hoping or assuming that you may be in the local area of Jurien Bay, Cervantes, up in the Dandaragan Shire. The short answer is that we principally operate through employees only, but we always have an eye open for tech service teams that can provide specialized service. So what I'd suggest you do is contact us through our website. There will be an info email address that you can reach, or even a phone number to call through to talk to our Chief Operating Officer. Thank you for that, Nathan. And another from Young. I recall reading a previous annual report that we have a project for gold exploration. Do you have a timeline for or a plan to begin the exploration? Thank you, Young. The short answer is that we aren't exploring it now. We are not. So I appreciate the question. Our focus, of course, is that we are a mineral sands company, and that is our ambition, and that is our objective for shareholders. Having that gold project, though, in our portfolio is real, and with the gold price, at record levels, it's very difficult not to look at it. So we haven't published our strategy around that, but as you can imagine, we are looking at what our options are for either advancing some exploration or perhaps looking for interest in the market for that project or that set of projects. So there may be more to say about that later in the year. But for now, our focus is to remain on mineral sands and production. Now, I think that's the last of the questions that I'm seeing here. So I want to thank everybody very much for participating today, and I look forward to another podcast in the coming months, and hopefully, of course, being a bit richer about our return to production and positive cash flow. Thank you very much.